Today I'm going to show you how to get the absolute lowest interest rate for commercial property. Follow me. It took me, guys, 25 years of hard work and sweat to learn how to get to this point and get the best lowest interest rate. I want to teach to you how do you do it. Based on the property you want to purchase, say 20 unit, 50 units, you want to make sure that you're qualified. And if you're not qualified, that's okay. You're going to partner up with another individual that is qualified. And that's how you're going to get started. When I started out, don't kill yourself. I did not have the high net worth. What did I do? I team up with someone smarter than me, someone with a high net worth. And it's okay. Once you do one deal and another deal with that individual, now you're going to build up your own net worth, and therefore you don't need that individual anymore. But to get started, it's okay to team up with someone stronger than you. This is the recipe for success. And the way you approach that high net worth individual is basically, first you have to put together the model. You have to provide some kind of paperwork, some kind of pro forma to demonstrate to that potential investor, potential partner, why is this a good deal. Once you do that, you need to tie up the property with a contract. Do not tip off anybody about a potential deal until you have it under contract. Then, once you approach that potential investor to partner up with, you may want to offer him some kind of incentive so he can sign for you on the loan. For example, give him a 20% profit sharing, and it's okay. Let him make a little bit. He needs to know, why am I going to sign with you? Why will I do that for you? They need some kind of incentive to come in and deal with you. Good example of partnering up with an individual. If the deal that you're able to secure is a good deal and you see a tremendous good story for the opportunity, I can always guarantee you, you will have people jumping in to be your partner. But you got to find the right deal. Say you find a property, now you want tied up, but here is a problem. You're not qualified. Do not be afraid to team up with someone smarter than you. Remember, this is the only one deal, second deal. This is not forever. It's a temporary situation to get you to the next level. You want to team up with someone with a higher net worth. And that is the value they're going to bring to the table. Say someone come to me with 50 units. Obviously, 50 units for us is small, but you know what? It's 50 units. The person did their underwriting, they put it together, they find the deal, they show me the upside, they literally give it to me on a silver spoon, and they ask me to be a guarantor. Now, what is the upside? Are we talking about something that's going to take years to achieve, or is it going to be 12 months or so? I will definitely entertain such a deal and be a guarantor with the idea, because I'm going to have to be a control freak and control the property. That's not to say if the deal is way too good to be true, and that individual looking for hands-on, day-to-day, why not? I need to see the deal. I need to see, how did he underwrite the deal? Did you look at the comps? Did you look at the rent in the surrounding area? Just to go and buy a property because you want my signature, that's not happening. It needs to be a good story. You gotta find people that doing the same thing. For example, let's say you find a building, 50-unit building in the community. Now you're gonna go next door, find out who's the owner of that property. Now, do not tip off people. Do not tell a potential partner or potential investor, hey, I have a deal for you, I want you to partner up with me. They may go around you. You want to be able to tie it up, have a contract with you, and then you can go and find people in the community. For example, owner next door, look at the tax record, find out the phone numbers, call the LLC, go to the property manager office, tell them I have a property, I'm looking to team up with a potential partner. It's a great opportunity. Now, definitely do not tip off a potential investor about the property until you sign up and have a contract, so no one goes around you. While you're doing that, and now you have a property under contract, and you're gonna have to put some money in escrow. Make sure that money that you put in escrow is refundable for any reason, no reason. Therefore, you can get out. Typical time usually is 30 to 45 days. Now you've done that, and you're looking for a partner to come in with you on a deal. Put together a non-disclosure, and have that potential partner sign a non-disclosure so they don't go around you in case you're not buying the property. They can just go around you, the contract fail, and buy the property without you. That's a no-no. They must sign a non-disclosure. Step one, before you even look for a partner, you want to put together a pro forma. This is a good property. So when you do find the right person to partner up with, there is a good story to present to them. An example, how do you plan to raise the rent? What is the projected return on the down payment? So let's say the down payment is $1 million. What do you expect to gain back? The typical investor will be looking for a minimum of 2 multiply. That means the 1 million become 2 million. The model that you're going to present to the potential partner is extremely important how you present it. And you got to put pictures, and you got to put before and after, and what you plan to do with the property. So obviously the big challenge, say you find a property, now you want to find a partner. Where do you find a partner? And how do you know that partners qualify? So I suggest look up friends and family. Don't be afraid to ask questions, because once they come into the deal to partner up with you to buy property, those are valid questions. Are you qualified to sign the loan? How good is your net worth? And if you don't want to go to friends and family, which I don't blame you, you want to seek elsewhere. I would strongly suggest to go to for owners of properties in the surrounding area you're looking to purchase a property. You can find the number in tax record, and you can call them up, and you can look through their LLC and set up a meeting with them that you have an opportunity you're looking to present to them. The way you do it, you don't have anything to sell to them. You want to bring them an opportunity, because nobody wants to talk to salespeople where I have this for you and I have that for you. They're tired. They want to know there is an opportunity that you want them to get involved, and that's how you present it. So now we are going to step 2, where to find a partner. Now you got a potential investor that you think may be a good fit for you. And again, do not be afraid to ask questions. Do not be afraid to check background check. Do a credit check for that matter, because one thing they want to do is waste your time. And remember, once you sign the contract, now time is of the essence. Most of the time, sellers are very strict when it comes to date, and there is no extension. It's going to be difficult to get extensions. So every day is very precious while you sign the contract. You have about, from the time to negotiate a deal and sign the contract, maybe a week, and then contract timing is about 30 to 45 days before money become non-refundable. When you do sign the contract, make sure you put on the dotted line, money is refundable for any reason, no reason. You have the option to cancel the contract. Therefore, you have 30 days or 45 days to walk away with 0 damages. That's the most important thing, or one of the most important things in the contract, because you always want to make sure you are safe. Your deposit money in escrow is safe. Step 3, what do you offer the potential partner to sign on the loan? Do you offer commission? Do you offer a fee? I don't think commission or fee is what they're looking for, but you don't want to do that, because that means more money out of pocket. So I suggest you offer them more percentage in the deal. For example, profit-wise, 60-40. Offer them a 20% promote. I would start with 10. 10% promote profit-wise only. If they don't like 10, go for 20. What does it mean? The first 20% of the profit goes to that person after you get your money back. And then it's split evenly, 50-50. Do not let the other partner or the new partner that you brought into the deal to have 51%, meaning a decision maker majority on the project. I do not agree with that. You give him incentive, give him more profit, yes, for sure, but decision making always 50-50. Step 4, we have to go to the lender now and pick up a lender so we can get a mortgage. The way to pick up a lender is you need a lender that familiar with the location, familiar with the area. I don't like to get somebody out of state, because now they're trying to reinvent the wheel. A mortgage broker can be very good if you know of one. Mortgage broker that is good typically can bring a good value for you by introducing you to a lender. So do not be afraid to use a mortgage broker. After you vet them, of course. Make sure they know their property, they know their business. Because again, time is of the essence, and one thing you don't have is time. To close it up, number 1, find a property that fit your niche, that you can be comfortable operating the property. The next thing is find the right partner by way of vetting them and asking the right question. And by the way, do not be afraid to do a criminal check. Those things are very important. The next thing, put together a pro forma, put together a model, okay? Why is the property make sense, and where do you see the property going from point A to point B? Very important to put together the nice package for the lender with pictures and comps in the area and numbers, current numbers and pro forma numbers, and where do you see the property sell in 2 or 3 years. Lenders love to see a good model. That means you make their life much easier to present to committee to get you loan. And that's bottom line. Very important, the presentation, it says it all when you go to the lender.